Welcome. My name is Van Richards. I'm a chartered financial consultant, and welcome back. If we got kicked off there just for a moment because of some technicalities, but I want to welcome you to the daily stock analysis. We have a lot of good information to talk to you about today about Qurate Retail. So we're going to go ahead and begin right into the daily stock analysis. Thank you for joining us. As you join us today, I want to remind you that if the Christmas season has left you financially frustrated, you need a financial plan. Go over to richardsfinancialplanning.com and you can learn more about the prosperous planning process. So let's go ahead and begin into talking today about Qurate Retail. This is actually a viewer's choice. Every day as I bring information to you, I'm here to bring you great stock information, analysis about some of the best companies in the country, in the world. But from time to time, I get requests from you, and today is one of your requests. This is for Qurate Retail. So as we begin into today, I want to basically bring you up to speed because some of you might not really know the name Qurate Retail, although if you have cable TV, you know Qurate Retail. And the reason that you know Qurate Retail is because of HSN, the Home Shopping Network, and QVC. Both of those companies are part of the Qurate Retail platform. The company in itself is Video Commerce. It's a small cap company, had about $3.4 billion in revenue from the first quarter. They're doing very well from the pandemic, from what's pushing the company forward. Their primary platform is, as I mentioned before, QVC and HSN. Also, although they do have QVC International, they have Zulily and Cornerstone also. Those are other assets that work very well for the company in itself. They are worth about $4.41 billion, and they're considered a small cap value company. Now, as we go into January, I want you to remember that there is usually a economic anomaly that happens in January. And one of the reasons why I wanted to talk about Qurate Retail is because it's a small company. It's a small company that has momentum coming, riding the wave of people being at their homes, and they are using more video commerce platforms. So with that idea in mind, the anomaly that happens usually in January is that small companies do better in January than any other time. And we're going to see if Qurate Retail may be one of those companies. They finished the day down just a little bit. They were down 1.89%. But the company in itself actually has three different share classes. They have the Series A, which is basically regular common stock. And the way that it's set up, it's based on control of the company, really. The Qurate Retail shares A, the Series A, get one vote for one share. Now, if you look at the Series B, the Qurate Retail Common Stock, one share gets 10 votes. And then there's also preferred shares that have limited voting rights, really no voting rights, but they pay dividends very much like a bond. And they're also redeemable, so they have a limited life in itself. But the one that we're going to talk about today is the one that's available more to the public, which is going to be Qurate Retail Series A. Of course, the preferred series are available also. Series B, we don't see quite as much. Remember, as we talk about any of these stocks, we emphasize three different things. We talk about the stability, the earnings, and the competitiveness of every stock that we discuss. And we begin that really by following through and looking at what the competitive nature is of the company. And we do that by looking at their economic moat. Some people call it an investment moat. It's that invisible barrier that's between the company and their competitors. And really, I think that most analysts are going to agree, as you see through this information today, that Qurate Retail really doesn't have a moat at all. There are 5 principles to a good moat. There's the network effect, which basically means one person uses it, then another person uses it, then another person uses it. And the focus of Qurate Retail's customer base is so lasered and focused that it really doesn't give an opportunity for the network effect. Their primary customer is women between the ages of 30 and 50. As far as proprietary assets go, they really don't have anything as far as proprietary assets. They have know-how, which is important. And we're going to talk about that when we get to some of the bullish aspects. But they really don't have any patents or anything like that that is significant. I'm not completely familiar with it, but I'm going to say that there's not a significant amount of proprietary assets there. They really don't have that much of a cost advantage when they compete with companies like Amazon and Walmart. As far as switching cost goes, it really is just switching the channel and the customer goes to the next person. Now, in saying switching costs, though, one thing that does work in Qurate Retail's advantage is that their focus on that 30 to 50-year-old woman, that customer, they're very faithful customers. And you're going to see as we talk through this that those customers really is what drives the company forward. You're going to find that usually this company, from studying the information that's available that they put out there for investors, that a good customer is one that fits that criteria, that profile that I just mentioned, and they're coming back 20 to 30 times within a year, sometimes really within 60 days. Size advantage, they don't have that much of a size advantage either. At $4.41 billion, they're primarily going to be a small cap company. Now, when we look at the earnings, I wanted to use the graph that I've thrown up on the screen to talk about the quarterly earnings. We go back to 2019 before the coronavirus pandemic began, and we can actually see that the earnings were slipping quite a bit. And really, if you look at it in total, the reason I use this type of graph is you can see that the first quarter of 2019, they were down 4%. The second quarter, they were down another 4%. The third quarter, they were down another 4%. The fourth quarter, they were down 5%. So when you add all that up, they were down pretty close to, let's say, 20% really in that period from that as far as the quarterly revenues goes. All of that came roaring back with the pandemic because so many people are staying home and the video commerce platform has really taken off going forward. Now, when we look at what happened last year, you can see the revenue by billions of dollars through the first, second, and third quarter. They were increasing and then became pretty steady going forward. Now, when we look at the earnings over the past years, and we stretch it back, let's say to 2014, they really haven't been growing that much. In 2017, they had a big spike, but most quarters and most years, it's been pretty even. It hasn't really been growing. A lot of times when we're looking at a stable company and we're talking about the earnings, the competitiveness, and the stability of the company, the stability should be the hallmark of a good, stable company is growing revenues, and the revenues right now are flat. And part of this today is just to kind of give you an idea of where they are now so that you can decide whether this is really going to be a company that you want to invest in going forward. Now, the pandemic has been one of those things. It's been what I called the notorious revealer of trends. And that means that a lot of people have been using e-commerce, but they're using it more now because they're stuck at home or they're working at home, or there are some regions of the country and the world that they are regulated, they're forced to be home. So they're using e-commerce platforms as a way of purchasing items, whether it's things they need or what they want or whatever the case may be. That's driven the cash flow of this company significantly. It's driven it to the point that they've paid out one significant dividend. It was actually December the 7th, $1.50 per share. And it was all actually across the different share classes, A and B. And that's really just a one-time dividend. It's a special dividend. So we're not going to talk about the fact that it's going to be continuing. You would not purchase this stock if you were looking for regular income as far as dividend goes. Now, what's gone on over the past year as far as value goes? This is what has been attracting a lot of people. And the viewer that I had that requested this, I am sure, has looked at this growth and said, wow, this is really doing good. This is one of those stocks that's benefiting because of the coronavirus. So when we go back and we look at what happened this time last year, this stock was only really selling at about $7.02 per share. And then when we look at right now, it finished today at $10.37. And amazingly, that's a 47.64% increase. But you have to remember, when we go back and we look at it over the past 3 years, 3 years ago in 2017, the price of the stock was around 22.97, close to 22.98. And as it ended today at 10.37, if you held this stock 3 years ago, you've experienced a 54.87% loss. That's an annual loss of about 23.3%. Okay, as I stop here and just pause for a minute, we have a new sponsor today. The new sponsor is Advice for Life Insurance. And I want to remind you that your family needs protection. They need life insurance, and you can find the best life insurance at the lowest price in less than 5 minutes at adviceforlifeinsurance.com. So as we talk more about the bulls on Qurate Retail, this is what some of the analysts have been saying, and this is some of the information that I've garnered, because there's not a lot of information that's out there. There's only about 5 analysts that are really following Qurate Retail. The biggest thing is, and we've talked about it, the increased revenue from the stay-at-home phenomena has been significantly beneficial to the company. The other thing that's really good is that laser-focused customer, that woman who is in between just ages of 30 and 50, she is sticking with this company a lot. They are very, very faithful customers, and they're repeat customers too. One of the other things is that QVC and HSN has been around for a long time. They have a lot of different know-how on e-commerce and video commerce, and they're actually being copied by several other companies as well. They have an established supply chain where that's growing in itself, because they do have a significant footprint. Now, when we look at what the bearish investors are saying, this is actually something that not just analysts would say about Qurate Retail. This is something that comes directly off of the 10Q form that Qurate Retail files with the Securities and Exchange Commission. And they recognize that their business could be adversely affected by different government regulations, especially from the Federal Trade Commission, because they depend upon the airways. They depend upon TV and cable for their business to be propelled forward. So regulations that affect them negatively could impact their business a lot. The supply chain disruptions due to coronavirus on a worldwide basis can have an impact going forward on different types of items that might be available. They also have a big threat of competition from companies like Amazon and from Walmart. But they also have competitions not just from mega retailers, but from different types of companies and products that they may be selling. A company like Levi Strauss or a company that sells Tommy Hilfiger may be direct competition, because they're actually copying the type of platform that HSN uses and QVC uses. It's not something that's proprietary, and they're starting to use it more. Another thing that might be a disadvantage that you should be aware of is that they are aggressively buying stocks back as a company, and the company is very concentrated in its ownership. Now, I want to bring this part up to you, because when we look at Qurate Retail, the company is really owned primarily by one person, and it's John Malone. He's a billionaire in the United States. And I want to educate you a little bit on the problems that can occur by trying to follow the coattails of a billionaire and invest the way that they do. If you're not a billionaire, sometimes you could fall on hard times. You need to diversify. You can't just go out there and say, I'm just going to buy Qurate Retail Class A shares or Series A shares, and that's going to be my primary investment. Now, what I've thrown up on the screen to give you the idea of why you should not just buy one stock, you should buy many stocks. The primary shareholder of Qurate Retail is John Malone. This is a list of John Malone's holdings, his public holdings. It's nothing private. And you'll see, if you look at the spinning green circle that's down here, you'll see that 94.1% of the Class B shares or Series B shares are owned by John Malone. And what that really means is that over 40% of the total value of the company is owned by John Malone. So what's that mean? That means that basically he can do whatever he wants to. He could have the company go whatever direction he wants. He could basically take the company private, which is something that another gentleman who's a billionaire by the name of Patrick Drahi has actually done with his company that's called Altice. He's trying to take Altice private. And in doing that, what he's doing is he's negatively affecting the small shareholders by just giving them, this is the value that you get. And it depends upon the country that you're in, but sometimes if you're a majority shareholder, you can basically kick the small shareholders out and take over the company and give them whatever the going market price is. So be very, very careful of trying to ride the coattails of a billionaire in investing. And this is actually an article from the Wall Street Journal. If you want to go look it up, it's from December the 7th, and it's called The Trouble with Riding the Coattails of Billionaires. And it tells the story of Patrick Drahi and what he's doing with his company, Altice Europe, and taking it private. Now let's look at the competitors, because when we talk about the three items that are important, the three characteristics, the stability, the earnings, and the competitiveness, we got to keep in mind who they're competing with. Qurate Retail, if you look at the spaghetti graph that I put up on the screen, you'll see that they're listed in blue. And really, they're in the middle of the graph for the whole year. They've had a positive year. But on top, the company that's besting them is Amazon. And I think that's not really a surprise. There's another company which is called PVH, and PVH is the company actually that's behind, I believe, Tommy Hilfiger, and as also you'll see Levi Strauss listed in there too, because Levi Strauss is using the same strategies that QVC and HSN is using to sell its products. So not only is Qurate Retail competing with the Amazons of the world, and yes, Facebook's doing the same type of thing of trying to sell online. There's a whole host of different competitors which are out there. And yes, HSN and QVC does have know-how, but that know-how is not proprietary. They can basically watch and try to replicate. I think that Amazon could do just about anything they want to. Now let's go back and look at this over 5 years, that same graph. In the past year, we'll see that Qurate Retail's done actually pretty good, but when we draw it back, actually 3 years, I think I might have said 5. When we look at the 3-year graph, we see that they're really lagging behind the other companies that we're comparing this to, the Amazons, the PVH, Facebook, and Levi Strauss. So think about that going forward and ask yourself the question, is the next year going to be duplicated? Can it be duplicated by the company itself? So what's a fair value for Qurate Retail? Now, I want to tell you that usually I use Morningstar as an example, but Morningstar doesn't have a live person, an analyst that they have dedicated to follow Qurate Retail. So the information that I'm giving to you is based on their algorithm. Now, the algorithm basically tells us that the company is undervalued right now by about 21%. With the current price at 1037, their algorithm is basically putting the number at 1326 as being a fair market value. When we look at what the other analysts are saying about this, there are 5 analysts that are following Qurate Retail, and 4 out of 5 of them are saying that this company is a hold, and 1 of them is saying that it's a buy. When we look at the spread of what is out there, what the numbers are that these analysts are saying, I think that Bank of America has the most conservative numbers. They're looking at a price between $7 and $9. And when we look at the most aggressive numbers, they're from UBS Group. They're looking at between $9 and $12. And remember, it closed a little bit over $10 today. Now, the last graph that I want to show you is going to be from Morningstar. And what this does, I've shown this to you before if some of you joined me. And this is a graph that goes back over the last few years, all the way back to 2010, looking at the fair market value and the actual value. Now, the graph that you're looking at, the red is going to be the fair market value, which is determined by the computer algorithm. And the black notes is going to be the actual value. And you'll see that from, gosh, I'd say from about 2018, this company has traded below actually what its fair market value is. So I think that it has some potential going forward. I think that as far as like the stability goes of the company, it's kind of questionable, but let's say that the coronavirus has not really just been as far as trade goes and commerce, it's not been a phenomena that's going to be a one-time thing. There are a lot of these things that people are going to stick on to. Their earnings are stable. They're not growing over the past 10 years. They've grown in the past year, which is great, but I would say that they're stable. So if you're looking for a small cap company that might have a lot of good potential going into the next year, I think that you've got a good company to look at here with Qurate Retail. Now, the competitiveness, there's a lot of competition when it's out there. I wouldn't put all your eggs in this basket. This might be a company that could be an additional player on whatever investment strategy that you would utilize. Just remember, don't put all your eggs in one basket. If you follow the Warren Buffett simplified philosophy that he's communicated to a lot of people, is that if you bought 10 stocks, you can expect to have maybe 3 of them do excellent, 3 of them to do moderately well, and then 3 or 4 of them not to do very well at all. Don't put all your money into one stock. That's one of the most important things. And also have a plan. If you're not in Texas and you can't call me up, no matter what part of the world that you're in, find somebody that's a fiduciary advisor that can give you some personal advice that can help you develop a plan. You might like picking your own stocks, which is great, but work with somebody that can help you to get an overall plan so that you can work toward whatever goals that you have. Okay, friends, I'd like to thank you all for joining me today. And if you've got other investments that you'd like me to talk about, today's was a viewer's choice, go ahead and put them into the platform here on YouTube. Make sure that you like and subscribe so you know when I do the review of the stock that you choose. And I'll have some other ones coming in today too, actually in the next few days. So have a good evening, and we will talk to you tomorrow.